Using one word to describe a 2021 housing market, that is crazy. How crazy it is. I will show you a few data and also what are the takeaway from 2021 market and how it's going to be in 2022. This is what I'm going to share with you in today's video. First, how crazy it is. In whole California, the median price in August 2021 reached a record high of $830,000. And if you look at this table, 2021 compared with 2020, 2020 is already very crazy. So 2021 F is a forecast, but 2021 P is a 2021 projection data, which is more aligned with the reality. So as you notice, the median price went up from $659,000 to almost over $790,000, and it's a year-over-year change of over 20%. And meanwhile, the affordability index dropped from 32% to 26%. Interest rates still remain very low. It's really low at 3%. And a few more other things to show you, which is quite interesting, is in 2021, the segment that grows the strongest, performance strongest is actually the 2 million plus segment, which, as you can see in this chart, the sales is outperform the other price segmentation. And overall, the house that sold more than 1 million is more than those under 500K. Look at this trend line here. The blue line is for houses that's sold under 500K of the total house sold percentage-wise. And the green line is the one that sold over 1 million. As you notice in 2021, for these two lines, the green line is actually higher than the blue line. First home buyers still very active, even though the first home buyer is not as many as back in 2009, 2010, but still it's pretty consistent in terms of the overall percentage. The long run average is about 37% in 2021. The total buyers, out of total buyers, are about over 35% of first home buyer. And as you can see, first home buyer financially wise, they are pretty strong. First home buyers' median household income is $110,000, and compared with their mortgage payment, it's still quite affordable. Median mortgage payment is $2,300 every month. That is in comparison to repeated buyers. In repeated buyer, most of them move up. Obviously, repeated buyer has even stronger financial situation. The repeated buyer, as you can see, the repeated buyer median household income is over $170,000. That also gives you a picture showing that the buyers are actually pretty strong financially. If you notice their down payment, repeated buyers, the down payment, median down payment is 20%. Even a first home buyer, they are at least they have about 10% for down payment. And another thing that is not surprising is you definitely see more people buying second home, vacation home in 2021. This is the highest actually since 2012. That is quite understandable given people probably travel much less due to COVID-19. So vacation home for a lot of people become an alternative way to spend some time away from their primary home. So this is showing that in the whole California is very strong already, but the strongest area is actually here in Bay Area. Look at this number. The average sales growth 2021 compared with 2020 is over 21% in the whole California. However, in Bay Area, our number is over 32%. And here is the breakdown of the Bay Area counties. If you look at the Bay Area counties, you can see, Santa Clara County, in terms of sales price, year-to-year change is over 22%. San Mateo, even more crazy, it's over 34%. That is compared with same time last year. Now, San Francisco is a little softer compared with San Mateo and Santa Clara, which is because a lot of people do not need to stay in San Francisco anymore. they can stay a little further away. For example, they can stay in San Jose and work in San Francisco, since most of people can work remotely. And here I want to show you a deep dive of 2029 to 2021 trend of Santa Clara County single-family house sale price to list price ratio. As you notice, it hits the highest in 2021 year end. Usually year end supposed to be a slow season. However, if you notice the pricing actually year end is very strong. The sale price versus list price ratio year end 2021 is over 110% already. That's the highest over the past few years. And the major reason is because inventory is super low. This is inventory trend line that you can see since 2019. The inventory is already at that time very low. At that time, it's about 2.5 months, meaning that total houses, given the current selling speed, only take 2.5 months to get it sold. That's back in 2019. Now, if you look at the data in end of 2021, that's like less than half a month average to get the house on the market until it's getting contract sold. So that's ultra low inventory. Next thing I want to share with you is the sale price in Santa Clara County. For single family house, sales price is pretty strong consistently for 2021, especially the second half, start from June. As you notice, by end of December, the sale price, median sale price for Santa Clara County single family house, it's already at about 1.6, 1.7 million. So for townhouse and condo in Santa Clara County, it's slightly better than single family. However, it's still very strong. Look at sales price to list price ratio. We are at higher price sales to sales price ratio in 2021. It's basically hovering around 104% for most of the time. Inventory is also very low for townhouse and condo. It's very similar as single family. As you notice, the end of 2021, it's very low. It's less than half a month to sell the whole inventory. That's another reason the pricing is holding really strong. And the median price for for townhouse and condo in Santa Clara County already at around 920,000 level for townhouse and condo median price. So what is going to happen in 2022? Will the craziness continue? Few things that's going to have impact. Number one, inventory. Inventory has impact on supply, and supply demand in the end has a major impact on how the price is going to go. So the second is we're going to look at economy, interest rate, inflation. These are the few things that has major impact on housing price. Now, first, when it comes to inventory, a few things we noticed that's going to continue in 2022 is people stay in their home longer than before. Now look at this data. Since 2000 until now, 2020, the homeowners average stay in their home much longer. It used to be, people sell in about 4 to 6 years. And now if you notice, people stay in their home 10 years or longer. It's about 10, 11 years before they decide to sell. So what does that mean? That means it's going to reduce the inventory, because once they move in, they don't sell. It takes much longer, right? Major reason is because if they sell, given the current housing price, a lot of people don't know where they can afford to buy. And so a lot of people, rather than moving, they choose to remodel and stay. Especially this trend is especially obvious for single family house. Second is the housing shortage is still very severe. Previously, we talked about the existing home. Seller does not want to move. They stay longer. But if you look at a new home housing units, the HCD estimate is to be 180,000. In reality, if you look at, since 2006, it's consistently fell in shortage of the estimate. That creates another issue, because new home is not coming to the market fast enough, because without permits, you're not going to be able to build, right? So if you look at new home permits, it's a full big shortage of the estimate. So the next thing is, if you look at since 2018 until now, especially after COVID-19, 2020, the major shift is suddenly people all want size of home to be bigger. So average home before is a median square feet of existing single-family house sold in California used to be about 1,700 square feet. Now, since 2020, after COVID-19, there, as you can see, it's a major shift. This orange line shows you the median square feet of single-family house sale in California is becoming over 1,800 square feet. And this is going to be a situation we see continuously in 2022. Seasonal pattern is still pretty much the same as before. As you notice, since 2018, I give you the chart since 2018, you can see, every year you see the obvious seasonal pattern. Now, if you look at this chart, another thing you probably notice, the inventory is really getting less and less. The blue bar is for 2018 inventory, green 2019, the orange is 2020, and then the light green is for 2021. Look at how much inventory dropped in 2021. That's really only about 50% of total house for sale in 2018. Well, 2018 is already a very low inventory at that time. That is the major impact on the housing price right now. No house for sale, very short inventory, very small inventory. This another chart to show you the seasonal pattern. It's pretty consistent every year, as you notice. Usually the houses after May, you see from May to September, you see a pickup of the inventory. The beginning of the year and ending of the year, inventory is much less. So if you're looking for a house and you want to have more selection, then May to September is the time you will have more houses. But of course, they're likely to have even more buyers joining, right? On the seller side, if you want to have less competition on the seller side, then beginning of the year, ending of the year are the two periods that you have less sellers on the market. So we all know interest rate is very low and it's likely to go higher. Fed already expressed the indication to increase interest rate a few times in 2021. Now, I want to give you some historical perspective. If you look at historically, compare with a few years ago, we are at ultra low interest rate. Even though it went slightly higher at 3.5%, still we are on the low end. And that's giving you perspective of how much the interest rate might have impact on housing sales. The next thing that's always going to have major impact on the housing market is the economy, how the economic outlook is going to be in 2022. Now, these are the forecasts for 2022 economic outlook in US. GDP is still strong, 4.1% growth forecast. Job growth, 3.1, not bad, pretty aligned with what we see in 2021. Unemployment ratio is going to continue to go lower. CPI will be slightly better than this year, which means the inflation might be getting a little bit easing if the supply chain issue gets improved. The disposable income, however, is going to be less compared with 2021 and previous few years. And these are the forecasts for the 2022 for the whole United States. Now, if you look at California, that is even better. That's much better, actually, than the rest of the country. Look at the job growth, non-farm job growth, 2022 will be way stronger than 2021. Unemployment ratio is going to be dropping quite a lot. Population, if you notice population, it's going to be stable. Now, we know 2020, there are people moving out of the state, especially for Bay Area. But if you look at 2021, 2022, the population growth start to get stabilized and start to picking up again. How does that translate into the housing market outlook? So these are the forecast data by California Association of Realtors I want to share with you. First is the total single-family house resale number is going to be less than 2021 projection. It's probably going to be aligned with 2022 number. As you notice, the change compared to 2021 is going to be about 5.2% reduction. Median housing price, on the other hand, is going to continue to grow to about $834,000, even though the growth of the pricing is slowed down, but it's still forecasted to be higher compared with 2021. So if you're waiting for housing price to drop, maybe you want to think about it again, given the forecast data showing here. year over year, compared with 2021, the forecast for the whole California pricing change is about 5.2%. Housing affordability index is going to be dropping even further. Now, this is for the whole California. Notice, remember, before we showed you Bay Area usually outperform the rest of the California in all these numbers. So if you are here looking to buy a house, so you're gonna likely to see price increase is even higher than those forecast numbers. 30-year fixed rate forecast to be 3.5%. So bear in mind that these are just forecast number in terms of really what happened. Remember the first chart I showed you how the projection in the end is very different from the forecast. So you need to adjust and get updated constantly. But the framework does not change. These few factors that I showed you here, it's always the most important factor you want to look at to judge the housing pricing and direction. Inventory, economy, interest rate, inflation. These are the four major important factors that have impact on housing price. All right, that's all for 2021 recap and 2022 forecast. If you have any questions in terms of whether it's good time for you to buy, whether it's good time for you to sell, give us a call or email me. Here is my contact. You can always reach me. We have also our Chinese channel, Sophie in Silicon Valley Real Estate. If you want to get information and video in Chinese, check Sophie in Silicon Valley on YouTube and subscribe. In this case, you get our updated Chinese video too.